Hey yo, how's the fear with my people? Those that never miss an episode of the best crypto content on the tube. Well, the markets got hit hard. That's why I asked, how's the fear? Are you scared? Shaking in your boots? Well, sit down, relax, grab a warm cup of tea, and let your boy snuggle you to comfort. Because it's time for chicocrypto. Yeah, so let's begin by pulling out the Bitcoin price. As of Sunday, the price wasn't looking too bad, hanging on to 66K. But as the clock turned to Monday, dump baby dump. Down to below 66K, below 65K, 64K, 63K, down below 62K and 61K. But it decided to bounce off 60K support based on the hour. Although checking out a more detailed chart, there was a quick wick down to 58K, although that got scooped up in minutes, pushing it right back to above 61K. But as of shooting this video yesterday, we were barely hanging on to 61K, and the price was looking like it would fall once again. So it looks like Plan B's prediction of 98K for the month of November is going to be fully invalidated, right? The S2F model is fully broken. Well, I just want to replay this clip from Monday and what I said regarding what's coming. Well, the market manipulators, aka where leverage rules, want Plan B's model to look like it will be fully invalidated. The shorters will start stacking the shorts and then pump baby pump, liquidating all those bears. It's a short squeeze in the making.
We want to pump you up.
Market manipulators are looking to make it seem that his prediction isn't coming true. The model will be fully broken. They are looking to set the shorters up and then squeeze them short leveragers the funk out. Unfortunately, it's all about leverage, my friends. The recent dip that came was due to setting up the longers, those who truly believed we would have already broken 70K and been on our way to 98K. Checking out BYBT and their liquidation data, we can see the dip on Monday netted leverage exchanges nearly 800 million in long liquidations. They flush those guys out, the longers, and next very soon is going to be the shorters' turn. Why? History, my friends. Let's just go back to the bull run of 2017, July of 2017 to be exact. As we can see, the price started just below 3K, and then it pumped up to 5K. Then it had its September dip, and then by November, it was above 7K at its peak. Now let's just pull out the BTC chart from this year, by 2017's side. This year, starting in July, we started at 30K, pumped to just above 50K, but then we had our September dip, and then we pumped to just below 70K at our peak in November. Why so gosh dang similar? So the dip in November 2017 took the price from about 7,500 to about 5,900. This was a loss of 21%. The dip this year in November took the price from about 68K down to about 61K, which is a loss of basically 10%. Now, if we were to follow what happened in 2017, a 21% loss in November, BTC would dip down to just below 54K. Although I don't think that's going to happen, and if it does, it's not going to be that steep. We may even hold right here. The dips in 2017 were more severe than this year. For example, the September dip. In 2017, the price went from 4,900 at its peak down to about 3,100 in September, a loss of nearly 37%. This year, the price went from 52,700 down to 40,400, a loss of about 23%. That's a difference of 14% between Septembers. And with this year's November dip being only 10% and 2017's being 21%, that's a difference of 11%. Based on those numbers, it kind of makes sense that this may be the low for the November dip of this year before we start our move back up and go parabolic, just like what happened after the November dip in 2017. We went parabolic throughout November. But if we follow the pump in 2017, will it be enough to reach Plan B's prediction? Well, remember the November dip back then took us down to about 5,900, and by November 31st, the price reached $11,000. That was an increase of about 86%. From where we were at yesterday, 61K, to Plan B's prediction of 98K is a pump of about 61%. So in my opinion, Plan B's prediction is definitely not off the table. And like I said on Monday, I still hodl this to my heart. What's more likely in my opinion? There's going to be certain days where the price explodes, gaining 5K in just a single candle, and possibly 10K in a single day. And I have a feeling those are coming towards the end of this week and into next week. So right now with this dip, it's a screaming opportunity to me, not only for Bitcoin, but for those altcoins. And there is one altcoin opportunity I've been eyeing like a hawk, and now it's time to uncover and reveal it. So everyone knows about the high APYs in DeFi. High APYs from the likes of projects like Klima, and the hundreds of other forks that have followed. Well, November 15th, a Will Villanueva tweeted this: leveraging into yield exposure on Element Finance. Check out these 6 to 7 digit APYs. No tokens involved. It's called yield token compounding, and it's exciting that someone is releasing this product on top of us, coming soon. With a picture showing some of those high APYs, 1.18 million APY, 732,000 APY, 433,000 APY. Shoot, the lowest APY he shows is nearly 40,000% APY, higher than the APY right now on Klima DAO. So is the token from Element Finance? Well, no, Element is tokenless for now. And Will, the founder and CEO of Element, said someone is building the product on top of them. Who could it be? Well, all the way back in the middle of October, a Mr. Stive or Mr. Steve put out a thread breaking it all down. The first part of his tweet thread said, Warp is about to release its V2 Blacksmith, further innovating on lending for yield-bearing assets. The DeFi 2.0 narrative is strong, but the potential of the Element Finance ecosystem it will leverage is underappreciated. And he breaks down how this will work. First, he breaks down V1 of Warp, saying they were a pioneer in the DeFi summer by being the first to enable borrowing against liquidity positions, LPs. He then says, but now Warp are innovating again with the goal of freeing the potential of other liquid yield generating assets, introducing Warp V2 Blacksmith with the initial focus on integrating Element Finance fixed yield assets, 163 million TVL. Warp will service and expand this TVL. Mr. Stive or Steve then breaks down exactly how Element works. He says, first, what does Element do? Well, it leverages yield-generating pools like Curve Finance and I-Earn Finance and splits it into principal tokens PTs equals the locked upfront capital, example 100 ETH, and the yield tokens, future yield expectation, example 12 ETH, accruing value over time. He then goes deeper into these token types, but I'll let you do your own research. His thread is in the description if you want to learn. But then he says, why do I say only 163 million TVL? Well, the potential of the ecosystem is much bigger. Example, let's look at the TVL of the 3 Curve assets supported on launch. Try Crypto 2, 725 million, LUSD, 112 million, ST-ETH, 4.8 billion. That is 5.7 billion that could find its way through Element Finance in these alone. So Element is about to get ramped up big time, but not only through their protocol, but by getting warped. He then says, enter Warp Finance V2 Blacksmith, which will provide a platform for borrowing stables using Element assets as collateral. That is, instead of forcing the primary selling the PT at an unfavorable discount, they could instead borrow against it. He then breaks down what this means even further. But what we're interested in is this from the thread. He says, further, both the primary and secondary participants can use Warp to borrow against their PT to buy even more PT at a discount. This creates leverage in the ecosystem, creating further demand in the system for PT, thereby increasing the incentives for the primary to mint more. How does leverage API work? Example, let's assume a fixed YT APY of 24%. If the Warp lending rate is half that at 12%, the borrower now gets a 10x return on the original APY, 240% APY. As the Warp lending rate decreases, 12% is high APY for stables, leverage tends towards 20x. And then going back to Will, CEO of Element, and his tweet, he said, leveraging into yield exposure. Warp is what allows that leverage and insane APYs. So how can we confirm this is true? Can we trust Mr. Steve and his excellent thread? Well, not necessarily. We have to go deeper, and we can confirm it from the Warp Finance team themselves. Just last week, November 10th, Warp released a testnet for Blacksmith and put out a promotional video for it. Let's watch now. And stop right there. As we can see, they say Blacksmith V2 will allow you to add liquidity to principal tokens from Element Finance. Check and mate. Cheers, viewers. I'll see you next time.